trend of the gap of supply and demand, so the lack of new projects coming on board, with the average grades also going down, so the cost of production going up, that this is the reason why there are so few projects in the pipeline, which is creating this massive gap in supply and demand in the mining industry, and that's exactly the opportunity.
All right, today we're going to be picking the brain of Arne Lutsch, who's actually my co-host over at the Battery Commodity channel. Arne, thank you for coming along. We're going to be picking your brain on your top-down Gigatrend electrification investing thesis.
Yeah, great to see you guys. Good to be here.
All right. Perhaps you can explain to us how you first came up to the commodity space, because you of course have a completely different background, as Lars and I are aware of. So perhaps you can explain how you first stumbled upon this industry.
Just by chance reading an article from, I think it was McKinsey or Goldman Sachs at the time, 2020, talking about a commodity hype cycle. I've been invested in US tech before, of course exited Apple, Nvidia, and so way too early. Timing never works, but that's how I got interested in the resource sector, in the commodity space in the first place, and then started investing in some small caps in Australia, found hot copper community online, and that led then to my first investment in a company where I was actually then directly engaged, reaching out to the management.
All right, and of course you've turned that into actually a channel that you're currently hosting, Battery Commodity, where you're talking with these management teams of junior mining companies and explain the investment thesis together with me and Lars. Perhaps you can explain how that story started. I believe you've made a trip to Greenland as well.
Yeah, so that was one of these moments. My management contract at Deutsche Telekom was coming to an end. I already had quite a large following on LinkedIn, and then I got a call from Thomas Abraham from Conoco at the time, zinc project to Greenland, asking me, hey, how about you join the expedition? And the deal was, you take a few pictures, you distribute it on your LinkedIn channel afterwards, and you get a free ride a few weeks in Greenland.
That is definitely very interesting. And I guess, how was that experience for you, joining an expedition like that? Did it change your view on the commodity space and what's important to be a success in exploration?
Yeah, I mean, for me, this was life-changing, just seeing the complexity. I mean, we're used to flying across the globe. A lot of things are accessible, and then you are in a place where you need to first fly to Iceland and then take the expedition ship for 4, 5, 6 days on the east coast, far up in Greenland. We'll post the map here, and then the next village or the next settlement is like 800 kilometers or 500 miles away, and you've got to take everything with you. So for 20 people or so, you need in total 40 tons of equipment and supplies. And for 6 drillers, you need to have a full support staff of 10, 15 people. And then you arrive in a camp, a bit like Indiana Jones style. So there had been previous mining activities in the 50s. So you at least have already the structures. You have houses there that you can use, but you've got no water, you've got no electricity. So you really have to start from scratch. Bring everything, haul everything over from the boat, which that alone took like 2 days, and get a camp that's fully self-sufficient, up and running. They'd shipped the aviation fuel beforehand, a year before, with a container. So the logistics that go into this, with permitting, with the planning, took like 2-3 years for Thomas and Conoco to just prepare that you then go on the expedition and actually start drilling.
Definitely drilling in the Arctic Circle is not easy. Like you said, the logistics super complex. And I guess also that story didn't end with that large of a success for shareholders. Has that also changed your view on the commodity space?
The first take could be, wow, this is so risky. It's like a one shot. When you have a drill season that's not successful, the company runs out of cash, loses investor confidence, the share price crashes. No other ways of refinancing then for the next drill season, and then all of a sudden the story comes to an end. But that's exactly the opportunity we're looking for, which is that this is the reason why there are so few projects in the pipeline, which is creating this massive gap in supply and demand in the mining industry. And that's exactly the opportunity and one of the mega trends that we are looking at right now, and why we are so excited. And in we, I mean you guys and me.
Yeah, definitely. And could you maybe take us along on that Gigatrend? What are you seeing in the markets, and why does that make you so enthusiastic about especially the junior mining space?
Yeah, so if we look at the trends overall, it's supply and demand gap in mining, it's electrification, it's deglobalization and inflation, US M2 money supply. So that's the four mega trends that I see as making a commodity hype cycle ever so likely: inflation, deglobalization, electrification, and supply and demand gap in mining.
Okay, perhaps we can start with the first one. That was not the first one you named, but I think the most important one behind your thesis, also because you are quite ESG minded, let's go like that, electrification. What do you see happening there? And perhaps for the globalist investor who doesn't have a background in mining yet, why does that trend translate to a need for more mines around the world?
So if we look at the statistics, this just came in from Bloomberg this week on China. CO2 emissions are for the first time ever going to fall. And you see here record deployment of solar, for example, but also wind and nuclear actually adding. And this is one of the hypotheses, of course, for solar driving the demand for silver. Silver is a key component as a good conductor in solar panels, and we've had decades long of record low prices in silver, and now industrial demand picking up again. So this is one of the trends of electrification. Apart from EVs, it's the record deployment of solar. Talking about solar EV sales, another big topic, and we've got various charts that will be blending in here now. Important to understand that even though it might not be happening in all regions, it might not be all happening at the same time. In China, greater 50% of all new car sales are electric in some form or other. And even with the hybrid cars, so those that has a combustion engine and a battery, the size of the battery has doubled over the last 2 years. And all of this driving demand for battery materials, so your lithium, your graphite, but also driving the demand for copper, for the infrastructure of charging. If we take large charging stations in China that have between 500 to 600 stalls for simultaneous charging, the demand just for a single station is anywhere between 60 to 140 tons of copper. If you then count the number of cities in China, there's over 10,000 major cities in China, you very quickly come up with great numbers. And if you then put that against the other trend of the gap of supply and demand, so the lack of new projects coming on board, with the average grades also going down, so the cost of production going up, making it less commercially viable, that creates a perfect storm. And I think for this year, if we look at the prices right now on a 12-month basis, let me just check. On copper, for example, year to date, we are up 13%. On 6-month basis, we're up 18%. So that's a good example. If we look at silver, 6 months, we're up 31% this year. On a 1-year basis, we're up 22%. So that all looks like a more fundamental trend than just a quick spike due to speculation.
One of your 4 reasons behind this gigatrend is, of course, electrification. We've talked about that. Electric vehicle sales in China, also solar. Any other new technology needs metals. That makes complete sense. I guess that conversion to demand is also logical to follow. But there's also a lot happening on the supply side. And I believe you also have some charts that show that not all metals around the world are well supplied currently, as there is a global underinvestment in mining.
This is a good example from gold miners, but you find similar charts on copper and on a lot of other of these base metals and precious metals. And this just shows the average grade that's being mined, grams per ton. And you can see in 2004 we had an average of about 2.3 grams per ton, and now we are heading down to 1.45, 1.55. And if you add to that, the cost of mining has gone up anywhere between 30 to 40 to 50% over that course of this decade, and that is driving prices. And right now we're seeing an all-time high and gold prices above 2,400. And we're also seeing a transition from paper trades to more physical gold India just took a delivery in June of 100 tons of physical gold. So that's also having an impact on the markets, in addition to mining just becoming more expensive.
And I guess that mining becoming more expensive plays into one of your other pillars, which is actually inflation. That's the third pillar of your four-pillar investment thesis. Perhaps we can also talk about that, I suppose, which is driving those costs for mining, meaning the prices have to go up.
Yeah. So if we, this is U.S. government spending, and it shows that in 2000 there was a surplus, but ever since kicked off with COVID, we've seen a record spending, so more money being printed, meaning that the M2 money supply is going through the roof, and that is driving, at least many economists believe, long-term inflation.
100%. And I guess that long-term inflation thesis also means that you expect the price of your materials, like copper, like gold, to rise, which hopefully also results in higher profitability for your mining companies.
Yes, and just to put that into perspective here with inflation, it's important to keep in mind that when we talk about inflation being set as a standard by 1% or at 2%, that is just a standard that was set once in a time, and that we have had waves of much higher inflation in the past. So if you look at this chart, you could argue we've seen nothing yet, and it wouldn't be that extraordinary if we would have 7-8% inflation over several years to come.
Yeah, I think Lars and I wholeheartedly agree with this, especially if you look at how quickly the M2 money supply of the US, which is of course the most important currency currently in the world, it's increasing at about 8 to 9% compounded over the long run. Maybe it's 7 to 8, it depends on which time frame you look. But yeah, then what you're predicting here, inflation of 6-7% a year, especially the inflation that the consumer actually experiences, completely agree there. And then I guess the fourth pillar of your investment thesis is deglobalization, which might have an impact on mining as well. Perhaps you can explain what impact it is, because I don't think it's so obvious from the surface.
In the past, we had markets that were global, meaning that if you have the cheapest cost of delivering a certain battery material, a precious metal or a base metal, then you could sell that anywhere in the world. That if you want to have subsidies for your EV as a manufacturer, but also then as a consumer, the US is insisting on, with certain threshold timelines there, that a certain percentage, 70-85% of the raw materials in that vehicle have also had to be processed in the US. And that, of course, is a challenge, because in a globalized world, you have specialization across countries, whether that's also on mining, but also on processing, which is why companies like Ucore, for example, rare earth processing, they probably wouldn't have entered the market 20 years ago, because it is much cheaper, of course, to process rare earth materials in China. But now we are faced with a situation where this is critical, for example, for defense applications, and the US obviously wants to have control over that supply chain to whatever degree is feasible at this moment in time. And that's creating new opportunities through state government funding for companies like Ucore to enter the market in the US. So jurisdiction becoming the new currency here.
Yeah, it makes complete sense. And like you say, you see that in the news, all the government grants to critical mineral miners or developers. That's, if you look good, that's clearly defined. Now that you've explained these pillars, could you take us along in why you went for junior miners instead of the major players? Like, why are you investing in smaller exploration companies and not, for example, in a Barrick Gold or one of the big four?
If I would invest in one of the big four, I could just as well go to an ETF. Meaning that I wouldn't have to spend any effort on managing my money, trading that for less volatility, and trading that for possibly a lower rate of return. Now, as I like to spend time on the due diligence, access to one of the large major companies is, of course, much more difficult, and you have analysts that have access anyway. So how do you create an edge in a market as a retail investor? My theory is you have to go for market cap that is currently not in scope for large funds, and the funds have a threshold of 3 billion, 5 billion, depending on which fund you look at. So if you go in that smaller space, you are not competing with institutional investors to a certain degree, and you have direct access to a management. So, I mean, when we've been in Namibia with Tucano in the Amadabad region or with Liva Gold in Finland, this kind of access and direct interaction is much easier to facilitate when you're dealing with a micro cap, with a junior.
All right, and perhaps we can also dive into what are some of the, I mean, we've gone top down, which I believe is also your main way of looking at investments. You look at a large trend and then you try to see how you can capitalize on that. Perhaps you can take us along. What are some of the stories that you're the most interested about currently?
So there's also been a slight change over the last 2 years, partially working together with both of you guys, taking a very broad approach in the beginning, trying to cover a lot of the precious metals and base metals, and basically deciding for 2-3 companies in every sector, from lithium to graphite to nickel to copper to gold, silver, uranium, and so on. Now I'm taking a bit more weighted approach, meaning that I have a few stories where we've actually spent more time, where we are convinced about the quality of the company, the potential of the business case, and the outlook in the market overall, which is a shift that's happened from a very wide approach initially that I had, just investing in 30 companies, making sure to cover all the different commodities, to now being more weighted on stories where we see a huge catalyst, or where we've been very early. So if I take Pusar Helium, industrial helium out of North America, because I already knew Thomas Abraham James from Conico, I was able to make my investment in that company in the pre-IPO seeding round to very favorable terms and conditions. So that's definitely one aspect, and helium being a hidden champion, the demand for industrial helium is increasing. We've seen a 4x in the price for industrial helium over the last 10 years. And if you ask me, yeah, well, if that's such a no-brainer, why is not everyone investing in industrial helium? Then this is exactly a case of there is no spot market, it is intransparent, and even when you go to a commodity event like the PDAC in Toronto or the Swiss Mining Institute here in Zurich, and you ask people who are active in the commodity space for 30 years, they've never heard about helium. So that definitely gives you an edge. Also, of course, high risk, but it is a good edge as a very early stage investor. So that's the helium story. Then we've got Tucano out of Brazil. Very simple that at the time when that company mining gold went into administrations, we had gold prices of $300, $400, $500, $600 per ounce. The company then went into administration. Tucano, years later, brokered a great deal with the creditors, securing a deal, basically paying only about 16-15% of the replacement costs, so achieving a discount with the creditors. And now we don't have a gold price of sub 1,000 anymore, we have a gold price of 2,400. Of course, costs have also gone up, but Tucano have a good management team in place, and they are currently private, now going to listing, which of course is also an additional risk, which provides us with an additional upside. So there we've got gold with Tucano, we've got industrial helium, now copper, American West, Australian company, great expertise, super management, really good also on their cash management, cash burn rate, fantastic project, the Storm project together with Aston Bay. Aston Bay, Thomas Ulrich, fantastic incubator, very smart, focusing on the early stage exploration, then bringing in Dave and his team from American West. And there it's a combination of open pit, so short time to production, and a huge, massive underground potential. Even though the grades might not be exceptional and it might lack a certain scale, the mineralization on that project enables the copper to be crushed mechanically without using water or chemicals into a 60 to 80% copper ore on site, which leads to some very compelling economics. So that's the copper story. If we look at it, tech, so Joby, electric vertical takeoff and landing vehicles. I mean, for me, this story, when I came across them in Bangkok, with the ambulance that is stuck for 12 minutes in a traffic jam, hospital 2 kilometers away. How much would you pay? You're living in a high-rise building, you've got a helipad. How much would you pay for an emergency service? And looking at how people just compare this as Uber flying electric taxi, that also made me believe I have an edge, that I think this story can be so much more than just an Uber ride. And when we found out about the news 2 years ago that they bought H2Fly, the leading company for hydrogen flight, that Joby acquired them. We even got the court register data just to be sure, and the market didn't respond. And now, last week, we had the first flight, 523 miles, 800 kilometers with Joby Aviation, and the share price has gone up 32% since then. Yes, it's been a long wait for the last 2 years. It's been frustrating, like with so many projects, that you have de-risking, you're actually making progress, but the share price is going down because of market sentiment. But I still believe, and the share price over the last 2 weeks seems to prove that thesis, that we are on track. So that's gold with Tucano Gold, copper with American West, helium with Pusar Helium, and then electric vertical takeoff and landing with the Joby Aviation. And to add a fifth company here, AST Space Mobile, not really within this whole space, not really related, but as I have 14, 16 years background in telecoms, it's just one of those coincidences that you find this company on Reddit, like so many other companies, big meme stock, 12,000 supporters, but I have some good contacts still in Vodafone, and I was able to confirm with them that this is commercially viable, that the technology works, and that Vodafone have invested 100 million together with the likes of Google, AT&T, Verizon, and Rakuten out of Japan. So not quite your meme stock, just to the moon. Of course, high risk. We're waiting for the satellite launch here in September, but that's just the odd one that came across due to my previous network.
Thank you so much for sharing your investment theses there, Arne. Really interesting. Top down first, and then going into the industries, and then trying to pick the best companies after. Interesting, as Lars and I oftentimes employ a different strategy, bottom up, so always good to look at things from a different side to see if you can actually come to different conclusions. So thanks for sharing your thoughts, and hopefully it was educational for the audience at home.
Always good to see you guys, and looking forward to our next session.